This is BTV Business Television.
Welcome to BTV Business Television. I'm Jessica Katrachak.
And I'm Taylor Tone. Jessica, what if I told you the next big investment boom is already unfolding and these emerging sectors are flipping traditional investing on its head?
I'd say tell me more. Today, we'll venture into the research labs where companies are innovating everything from nuclear fuel to interactive displays.
And we'll decode the rise of mining royalties, share investments in gold in 3 countries, and highlight opportunities around copper's essential role in electrification and infrastructure.
We are on track to get to 1 million gold equivalent ounces.
Like many other startups, you start with a powerful technology platform.
The world needs more nuclear energy and therefore more uranium as fuel.
And Taylor, you're not going to believe the power of graphene.
Graphene is the strongest and most conductive material ever discovered.
It's all ahead on BTV Business Television. Investments with long-term vision are crucial to the continued success of any investor or company. And Wheaton Precious Metals, with a market cap of over 60 billion Canadian, is no different.
You can go out and just acquire and add growth for the sake of growth and scale. Our focus is on high quality, low cost, low margin assets, well-structured, accretive acquisitions. And so we've held to our guns and our growth has come the best way it could, which is by not giving up on your principles about good business. So we've had a good track record in that. We're not going to stray from that. And so our focus is precious metals. Our objective is to deliver profitable precious metals production, period.
Did you know graphene is 200 times stronger than steel, and it can also conduct electricity at 1,000 times the capacity of copper? One company is at the forefront of this exciting technology, and investors should be taking notice.
HydroGraph is a graphene production company, and how we produce graphene, which is the strongest and most conductive material ever discovered, is with an explosion synthesis process converting hydrocarbon gases into graphene. Simply put, we're making things have better mechanical properties, so stronger, or we're seeking to exploit its conductivity. Graphene is one atomic layer of carbon atoms. You can imagine graphite is billions and billions of layers of carbon atoms. And so HydroGraph, unlike other companies starting via graphite as a feedstock, we are purely synthetic. We detonate hydrocarbon gases.
Single-layer graphene was first isolated in 2004 in Manchester, and in 2010, that discovery was awarded the Nobel Prize in Physics.
Currently, we are targeting composites and coatings. With composites, most of our pipeline is involving engineered fibers. That could be a nylon, PEEK, carbon fiber, things like that. Almost an unlimited potential here. We can use graphene internally in drug delivery systems. It can be used in biosensors. It can be even used in wood. And then, of course, all of the standard industrial materials, the carbon fiber, concrete, plastics, you name it. There was created an institution called the GEEC, the Graphene Engineering Innovation Center, which we are now a partner with. And that's really the single largest catalyst towards commercialization.
As with most breakthrough technologies, the defense sector is taking notice.
Because of the work that we've done at the GEEC, we've created a very strong reputation, and they had actually introduced us both to the U.S. Army and the U.S. Navy. And now we do have very strong interest from the U.S. military. And with the Chinese graphite export issues that we're seeing now, this is, I would say, of critical importance to the U.S. government.
HydroGraph offers investors a rare chance to get in early on a breakthrough, scalable technology poised to transform industries from energy storage all the way to defense with advanced, sustainable materials. It's been a busy time at Electra Battery Materials. The company has restarted construction on North America's first cobalt sulfate refinery in Ontario and is advancing its asset in Idaho to potentially produce domestic cobalt, helping build a more independent North American supply of critical minerals.
Electra Battery Materials is going to be the continent's first battery-grade cobalt refinery. So it's the first battery-grade cobalt facility on the continent. All of the infrastructure is already there. The permits have been amended. And so what we're executing on is essentially an extension of the plant, an expansion plan. We've been fortunate to receive support from 3 governments. And so the capital profile, the risk, I guess, to execution has been moderated by some pretty significant government support, which is meant really to offset the pressures that you see out of China. This year is really about re-mobilizing construction crews, finishing construction, and to next year, you'll start to see product arrive at site. We're going to commission our facility, and then thereafter, we'll have that ramp. So the next 3 years are going to be very action-packed, very, very important that we get this first one right, and we get there as soon as we can, and then we'll all reap the rewards.
After the break, with the copper prices rising as they have, what does this mean for investors?
Where a 25% increase in copper price generates a 300% increase in net asset value.
We'll be right back. You're watching BTV.
It's crunch time. The U.S. is facing a growing shortage of copper and no longer wants to rely on foreign imports. With the government pushing for clean, domestic supply solutions, Highland Copper's Michigan project appears perfectly timed to deliver significant quantities when they're needed the most.
Copper was recently added to the U.S. proposed critical mineral list, particularly because of its relevance to federal defense applications. Copper was identified as the second most widely used material by the Department of Defense.
A problem with no timely solutions.
From first drill hole to production in the U.S., average development times are in excess of 20 years.
But Highland is near dated with permits and a feasibility study in hand. This, coupled with rising copper prices, is driving the potential for a valuation re-rate.
Copperwood remains one of the most highly leveraged projects to copper, where a 25% increase in copper price generates a 300% increase in net asset value.
For many small cap companies, the next step, financing the mine, can be a big hurdle.
We have seen the U.S. be very creative in terms of financing support, including debt, equity, and grants to drive projects to production. On the financing side, we've secured a significant vote of confidence with a letter of interest from the United States Export-Import Bank for $250 million in project financing. This provides visibility to a substantial portion of the project's $400 million initial capital requirement and positions Copperwood as a strategic asset for U.S. domestic critical mineral supply.
And for Highland, this caps off what has been a very busy 6 months.
We have concluded Phase 1 engineering, where we have taken steps to optimize project design. We have successfully completed early site work and concurrent reclamation activities, demonstrating our commitment to responsible development. And we have secured a letter of interest from the U.S. Ex-Im Bank for project financing. We've achieved a lot over the last 6 months and look forward to upcoming catalysts over the next year.
With a construction decision expected by 2026 and significant leverage to the price of copper, Highland has investors taking a closer look.
AI is fueling one of the biggest power booms in history, with hundreds of billions pouring into chips and data centers that will need massive new energy supplies. Yet, the entire global uranium industry, which powers the cleanest, safest, and most scalable form of energy on the planet, is worth only a few $1 billion. That mismatch spells opportunity, and one company that sees it clearly is Nuclear Vision.
The world needs more energy. The world needs more nuclear energy and therefore more uranium as fuel. If you look at various forecasts, most of them will show you a picture where demand exceeds the supply. This is not accounting for new technologies like new SMRs or AI demand, for example, which is a very topical but very important demand driver. Many countries in the world are very concerned about AI, and that is a national priority for them. And so if any country wants to scale their AI, then they need to scale their power. And the best way to get power for these AI chips is nuclear.
Fortunately, Nuclear Vision has found an ideal source of uranium in Botswana.
Geologically speaking, we believe we are analogous to the deposits in Kazakhstan, which produces most of the world's uranium today and most of the world's low-cost uranium today. It is one of the most mining-friendly jurisdictions in the world, and that is quantified by the time that it takes for a mine to go from discovery to production.
The company can also take advantage of a management dream team.
We are fortunate to truly have assembled a world-class team for the project. Our team brings decades of senior management experience from Rosatom, which is the world's largest nuclear energy company. It brings operational know-how, operational uranium know-how, but also proprietary exploration technology that we can use in Botswana to lower our costs and increase our exploration efficiency.
With AI's energy appetite only growing, Nuclear Vision is stepping into the spotlight, gearing up for field work and announcing strategic technology partnerships that could position it at the center of this emerging energy boom.
These are exciting times for Cascadia Minerals, a Yukon-focused copper and gold explorer. With its recent acquisition of Granite Creek Copper, including the advanced stage Carmax Copper project, Cascadia is becoming a powerhouse in a highly prospective region.
The Carmax Copper project is it's an incredible asset. There's very few of these copper gold deposits in North America that are road accessible within 10 kilometers of power. It's got 651 million pounds of copper, over 300,000 ounces of gold at over 1% copper equivalent, where there's 25 meters of over 2% copper, and it has hardly seen any work, and there's numerous targets all around. It's 177 square kilometers with road access all throughout it. So yeah, there's a lot of exploration potential here.
This high-grade asset comes with a low cost of exploration, which will greatly facilitate Cascadia's goal of doubling the current resource.
We're looking to do about 4,000 meters in 2025, and there's a lot of room for this to grow at a great grade.
With the accelerating demand for copper, this growth can't come soon enough.
We all know that copper is needed, especially copper in friendly jurisdictions, and I think that's one of the biggest draws is, you don't see these type of deposits on roads near power in North America. We now own one, and it's got great grade, so I think we've got a few exciting years of exploration and drilling, and taking it right through to pre-feasibility. So yeah, it's going to be a busy couple of years.
With the current low market cap for Cascadia, they anticipate a significant re-rate in the near future.
Attention investors, after the break, we'll tell you why it's time to have a serious look at royalties.
We don't operate the mine ourselves, we simply collect payments as production happens.
We'll be right back. You're watching BTV.
Back in 2004, Wheaton Precious Metals created the first ever mining streaming agreement. Now, 20 years later, they're still atop of this juggernaut market they created.
Back in the early days at Goldcorp, we needed to raise money to pay for all of our acquisitions, and we spun out this company. Back then it was called Silver Wheaton, and it was focused only on silver. We were a gold company, and we had byproduct silver production. So we took our silver production and placed it into Silver Wheaton through a streaming agreement. And so it was the first ever streaming transaction back in October of 2004. I don't think we even realized what we'd created in terms of what kind of an effective method this was for providing capital to the mining industry. And we created it 21 years ago, as I said.
A mining royalty is when a company gets paid a percentage of a mine's profits or production in return for providing upfront capital. It's a great way for investors to participate in many resource projects and take advantage of surging resource prices with less risk. One company leading the way is Vizsla Royalties.
We don't operate the mine ourselves, we simply collect payments as production happens. This provides shareholders exposure to the upside of mining and exploration without the operational risk or capital costs. Our cornerstone asset is a net smelter return royalty, also known as an NSR, on Vizsla Silver's flagship Panuco project in Mexico, a world-class high-grade silver and gold project notably over 15 million ounces of silver equivalent production per year.
And the rest of the numbers are staggering.
An 11-year mine life and over $1.1 billion US in after-tax NPV. 9-month payback period, all using base case price assumptions of $26 silver and $1,975 gold.
But rising commodity prices is not the only reason royalties have become so popular.
Royalty companies benefit from three main things: scalability, lower risk, and leverage to commodity prices. At Vizsla Royalties, we're applying this model with a clear focus, building a high-margin precious metals royalty portfolio anchored by the Panuco royalty. As Vizsla Silver advances this world-class asset toward production, our royalty becomes increasingly valuable for shareholders. As the sole royalty holder on Panuco, VRoy holds a 3.5% NSR royalty on the core mine plan. We have no debt, no capital exposure, and no operating risk, providing investors clean, leveraged exposure to a world-class silver project and its long-term cash flow potential.
With initial silver production from the flagship Panuco project expected in 2027, Vizsla Royalties is well positioned to capture the current commodity cycle and generate significant free cash flow for its shareholders.
In a climate where investor returns are top of mind, strong tailwinds are propelling private real estate into the spotlight. Forward-thinking advisors are taking notice, recognizing the sector's potential for diversification and long-term growth.
There really is a lot of opportunity in the private real estate market today. We're seeing renewed demand, especially in the apartment space. On top of that, we have the population growth that we're experiencing across the country. The supply-demand imbalance with housing, that's expected to get worse over the next few years. I think there's going to be a lot of opportunity in the multi-residential space. There's a lot of tailwinds with respect to that being a great long-term asset.
Private markets give you the real value for the asset versus being impacted by whatever's going on in the world. We provide our advisors access to anybody in the organization to make them feel comfortable in the decisions that they're making. And we ensure that the customer service that we give these advisors is exceptional. The benefits of private equity funds is diversification and the long-term growth potential.
After the break, interactive displays are designed to turn your head, and investors are also taking notice.
Electronic paper is a paper-like screen. It reads like ink on paper. It connects digital data to physical objects.
We'll be right back. You're watching BTV.
In Cambodia, where they currently import 100% of their hydrocarbon-based energy, one of the most exciting developments is the discovery of its first onshore oil and gas resource, a brand new industry for this emerging nation and a major boost to its economy. Leading the charge is a Canadian company, bringing decades of expertise to help optimize nationwide benefits, introduce best practices, and trigger a major economic increase.
Anchor Resources is what we call a resource optimizer. That means that we look in both minerals and the oil and gas sector, so we're in natural resources. In the next 90 days, we have 3 milestones that ultimately we can look forward to. The first one will be acquisition of additional oil production in Alberta. Number 2 is the completion of seismic processing in Cambodia. And third, results back from our assays on our copper-gold porphyry project, a very, very strong platform towards people, planet, profit. We bring the best practices globally that we've acquired so that Cambodia has that firsthand when they're developing their industry. And we're also really excited to be looking at Cambodia's first onshore oil and gas discovery and production.
Every so often, a breakthrough technology emerges with the potential to transform an entire industry. And for investors, getting in early can make all the difference. Invisible Interactive is at the forefront of this change, redefining how information is shown on everyday products.
It's like many other startups. You start with a powerful technology platform that solves a customer problem. About 3 years ago, we got on a journey to productize that technology platform, our prototypes, and offer it to the market. Electronic paper is a paper-like screen. It reads like ink on paper, but what it does, it connects digital data to physical object, the most energy efficient screen on the market. We have 3 categories of products. We have what we call indicators, screens or displays that show the status of a product. We sell it into industrial applications, medical applications, supply chain type of products. We also make signs, digital signs, sustainable low power digital signs. And the third category of products that we offer are labels.
With class-leading technology in hand, Invisible Interactive is now concentrating on the next logical step, customers.
We are in a B2B market, business-to-business market. So we work with our customers to specify our product for an end-use application in an automotive type of an application or medical diagnostic. So the development cycle is probably 6 months to 12 months. But once you commercialize it, you have sustainable revenue for lifetime of that product for years to come. So it creates a moat, it creates a barrier for our competitors to come in. It's an exciting time in Invisible. We have the technology, we have the product, we've got the customers, and we've got the manufacturing and supply chain to scale our business.
With their head office in Vancouver, manufacturing in Sweden, customer solution center in Portugal, and sales in Europe and North America, Invisible Interactive is well positioned to bring its innovative products to market worldwide.
How many clients are too many for a wealth advisor to handle effectively? It's an important question every high net worth investor should be asking.
How many is too many? I think it kind of comes back to what are your service expectations as a client, first and foremost. When it comes to the ultra high net worth investor, so we're talking folks with 25 million plus in net worth, they expect a lot more attention and a lot more proactivity. So we're talking about degrees of attention and service here. In our practice, because of our niche, the ultra wealthy, and because of that, we purposefully only take on 8 new clients a year. They expect a lot more attention. If an advisor has 1,000 clients and you're a new client to them, you can pretty much figure out that you're not going to get a lot of time and attention.
Well, Taylor, there are exciting times ahead for so many sectors in the investment world, driving both wealth creation and new jobs.
That's right, Jessica, and I think today showed investors emerging trends and some truly innovative companies with real investment opportunities.
I couldn't agree more. Thanks for joining us today for BTV Business Television. I'm Jessica Katrachak.
And I'm Taylor Tone. Follow us right here at Business Television and be part of a growing community that's turning insight into action. And until next time, may your portfolio prosper.